Today we have Adam Schmidt, the Director of Appraisal with Compeer Financial. Ascent has worked very closely with Compeer over the years. Values in land over time have seen its levels of volatility. We will take a look at historical land value trends, what the market is doing today, and what to watch for going forward. You are listening to the Legacy Leaders Podcast with Cassie Munger and Rachel Bork, powered by Ascent Advisors. Our discussions will focus on all things related to ag business planning, transition and succession planning, estate planning, and everything in between. Planning for change is inevitable, and keeping focus on the priorities and objectives of everyone within the family and business should always be top of mind. Tune in as we hear from special guests, peers, and industry experts to discuss topics we can all relate to. Welcome back, Legacy Leaders listeners. Today we have a special guest, Adam Schmidt with Compeer Financial. Good to have you here today, Adam.
Yeah, excited to be here.
So Adam is the Director of Appraisal with Compeer. You've been there for about 17 years now.
Yes.
So Ascent and Compeer has worked very closely with one another. We have a really good partnership. Actually, several of our consultants, probably about half of our team, have come from Farm Credit or Compeer. I myself as one of them. So it's great to have that partnership and really close working relationship. You know, we really value Compeer's perspective and especially just the knowledge and the expertise that each of you have in your desired area. So today we're going to talk a little bit about land values, and what better person to talk about that than the expert Adam. He's going to talk a little bit about historical trends, what we see. We know land values can be very volatile and have been over the years, kind of what we're seeing today and what we can anticipate into the future. So Adam, I'll let you kick us off.
Yeah, farmland values seem to always be a hot topic, and probably now more than ever, considering where we've been here recently, dynamics changing in the farmland agriculture market really, and what that means for land values. But let's just kind of look back. Most farm families, land is a long-term holding, really. It's kind of like a 401k for
it's pretty
farmers,
secure for most
landowners,
folks,
right? Yeah. And so I think it's pretty well publicized when you look back at historical trends. Farmland tends to be a really sound investment, really stable. There are fluctuations over time, but not rapid reactions to changes in the market. So really, if you go back 30 years, you kind of are looking at on average an 11% return when you look at appreciation in value and then the cash return on rent. And so I think that just goes to show for itself what type of investment farmland's been. I think another interesting dynamic, and this has played out even more recently, is probably pre-COVID a little bit, maybe even more post-COVID, but farmland continues to be looked at as sort of an investment class and attracting non-traditional farmer buyers to the market, recognizing the value it has as an investment, hedge against inflation. And in my mind, I kind of always go back to the old adage, they're not making any more of it either.
And just not to interrupt you, is that a concern, having, the non-farming investors? I think producers and farms themselves are, because like you said, land is a hot commodity. Is there any concern there that
it brings more capital to agriculture and rural areas, but it also is new competition for farmers that are maybe looking at acquiring land. So there's definitely probably a balance, and I suppose people that could look at both sides of that. But historically, a very solid investment. So let's take a look at what's going on more recently here today. Obviously, the last few years, we've had a really strong run-up. Strong profitability in the row crop sector, really agriculture in general, the last few years. A lot of excess working capital, and, farmer buyers and that investor class just looking to deploy that working capital and land. So we've had, really strong increases the last several years. However, profitability outlook has changed. It's not as good as it has been the last few years. So there's been a lot of questions. Well, what's happening now and what's going to happen? And one thing at Compeer that we do, we have 53 benchmark farms across our territory that we appraise on a monthly basis. Basically, intake new data that's happened in the market, kind of synthesize, all right, what's the new data telling us is happening with land values? And we do that, like I said, on a monthly basis. And if you look at the last 6 to 12 months, in general, pretty stable. Pretty stable. There are pockets that are stronger and pockets that are showing a little bit more weakness. A lot of that, I think, today has to do with location. If you're in an area that maybe there's pent up demand, maybe not as much land has traded hands the last few years. Hanging in there pretty tough, especially if there's good quality land and high quality, financially, farmers, operators around that area.
And that's probably stayed pretty consistent in all those areas, right? It continues to increase or stay flat, but it's not like you have one area that all of a sudden there's a lot more demand. It seems pretty consistent, you'd say.
Exactly. Yeah. And some areas that have shown a little bit more weakness, and this is probably primarily when we think about our Illinois territory where, we had a couple of years ago $20,000 to $23,000 land, and some of that top end has softened off a little bit, but I mean, shoot, this fall there's been some pretty strong land auctions around, so just kind of goes to show you the stability and demand of that market.
Yeah, well, and even just to compare, I mean, in my area, where we farm, where my dad owns land, I mean, I think there's pieces going for $5,800, $5,900, and that's high for our area. So it's quite a variance. Yeah.
Yeah, and we get the question, appraisers are, as part of our job, we're trained to look backwards and tell you what's happened, but we always get the question, like, what's coming, what's going to happen. And I don't have a crystal ball, but what I can tell you is I'll go back to those benchmark farms. We've done that every year for a long time. It's part of the farm credit system. And so we had a period of high prices, 21, 22, increased demand for cropland. Values went up, prices are down, like I've said. And so if you look back on history, there's a recent period in time where this same thing has happened. And, you go back to about 2010 to 14, strong profitability in the row crop sector. Land values went up significantly. And 2014, crop prices, corn prices, if you want to use that as a straw dog, dropped. And really, if you look at those price charts, very similar trend to what we're seeing today. And so our benchmark farms from 14 to 19, they didn't fall off a cliff. Those values didn't fall off a cliff. It was more of a steady decline until we hit a new plateau. So Minnesota, for example, over that 5-year period, around an 18% drop. And so, a few percent a year that we saw. And again, just kind of point back to crop prices were much different in that 14 to 19 period, and land values didn't adjust drastically. So sort of that stable investment.
But as you said, history kind of just continues to repeat itself.
Right. And now, are we going to see that again? A few things that, obviously today interest rates are higher than they were 10 years ago. Coming down, maybe we'll see how fast and how far they do come down. Inflation is real. It costs a lot more to grow an acre of corn today than it did 10 years ago. Now, yields have the potential to be higher today than they were 10 years ago. Machinery, everything's more expensive today. And so $4 corn today is probably like, $3.50 corn 10 years ago. So a lot of dynamics I think that are going to play out and ultimately tell the story over the next few years of, do we hang in there where we're at? Do we see a slow decline? I don't think anyone's thinking that values are going to fall out of bed here.
So as our clients and folks that own land and real estate, how should they be looking at those values long term? I mean, we're trending increases, each year overall. As we think about the potential Tax Cut Jobs Act at the end of 2025 and your estate exemption potentially being cut in half, is there concern that the increase in inflation and with land prices will exceed the exemption increases?
Yeah, I mean, I think we're looking at a period of stability now. I mean, the key factor with land is it tends to be long-term holding. And so over time, I mean, history would tell you that those values are going to continue to appreciate over time. We may be in a period of stability right now, but it all comes down to that time horizon.
Sounds good. Well, that was a lot of great information, and we hope you tune in next time. Thank you.
Thanks.